Yeah, I definitely encourage any buyer, any realtor that's working with buyers. You need to recheck your qualifications.
Yeah.
I mean, with a 1% change in rate, that could push you out of some of the programs. I mean, some buyers, not all, definitely like to push the envelope and get pre-approved to their max in
Yeah.
terms of qualifications. So it needs to be revisited by all. I would not, and even as a listing agent, if you're accepting an offer from somebody, you want to check with that loan officer and make sure that the new rates haven't jeopardized that pre-approval. So yeah,
Well, and
definitely.
I like what you mentioned 2 weeks ago about the rate lock, the extended rate lock for 360 days. So if you can get, not right now while it's, you know, going a little bit back and forth, if you can get in at a 5.25 or 5.75%, and lock that rate for 360 days, like that's, you know,
Yeah, and then you obviously have the opportunity to renegotiate it, provided that the market does improve. So, yeah, it's definitely a way to curtail rising rates, and especially in this volatile market. Yeah, I would definitely consider doing that moving forward. And again, not all banks have it, so make sure that you inquire about it.
yeah. What else did you want to try to go over today?
Yeah, I wanted to. I sent you something today. If you could put it up, pull it up. It's just again just something a little bit different to think about. Based on your down payment, instead of using it all that you were intending to use for down payment, maybe scaling that back a little bit and using some of that down payment money to buy your interest rate down. And in this environment where the rates have steadily risen, you get a little bit more return for your money on paying points. Normally, when you pay a point, which is 1% of the loan, so if you're borrowing $400,000, a point equals $4,000, 1%. Usually, that buys your rate down by about 0.25%. In today's market right now, the way pricing is and margin compression, you're actually able to, some cases, reduce your rate by 3/8 to 0.5%. So if you can pull up that illustration that I had sent you, we can kind of talk about it and give a real life example. All right, so let's talk about an example of utilizing some of the down payment towards buying down interest rates. So in the example here, let's say you have a buyer that's looking at a $500,000 house and had 20% to put down. That's $100,000. So borrowing $400,000 at a 6.25% rate gives you a payment of 2463, and below here you can see a little bit of a summary of total interest paid over the life of the loan, $486,000.
Wow,
It's a scary number
that's crazy.
when you see it. Yes. But so the thought is, instead of putting down 20%, what if you only put down 90,000? Use $10,000 that you were going to use towards the down payment to buy points to lower your interest rate. Naturally, somebody might say, well, if I'm putting less than 20% down, I'm going to pay PMI, right? So utilizing that $10,000, you're going to accomplish two things. Number one, you're going to get a lower interest rate and you're going to buy out your PMI with what we call a single premium buyout. That single premium buyout is a one-time fee you pay upfront, and then you have no PMI for the life of the loan. So in the example below, you'll see here a $500,000 purchase price, $90,000 down, it's about 18%. 410 loan at 5.5 brings your payment down to 2327. And you can see there total interest paid is 428. So option two is going to give you about $60,000 in savings over the life of the loan. And again, it's not impacting your out of pocket expense, because we're going to put down 100K. You're just doing it a little bit different. And
Well,
again,
not to mention it saves you.
about $135 a
Yeah,
month.
it saves you $136 a month.
Yep.
That's a huge. That's your gas. Well, I don't know if it's gas these days.
It's one fill up right now.
It's one fill up these days. Yeah.
But it's
You know.
listen, but it's again, it's doing something a little bit different than here's my 30-year fix. And I mentioned before in previous recordings that, hey, look, we're not order taker. You shouldn't be. If you're working with a loan officer that's an order taker that's just giving you a 30-year fix and not giving you options like this, you need to explore other options. But this is definitely a way to combat higher interest rates and just be a little bit creative in terms of structuring your loan. And the
Okay.
last thing that I will share with everybody today is, it all depends on the lens that you're looking through, right? So obviously rates are not where we want them to be. But as a buyer, in today's market, you're now competing against less thank you, you're competing against less competition, right? Because some people are going to sit on their hands right now and say, all right, well, I'm not moving forward, rates are too high, prices are still too high. So now for the people that can afford, because really at the end of the day it's about monthly payment. So if your monthly payment is manageable, then you have less competition, you're going to end up securing a home probably for less than what it would have been, let's say 6 months or a year ago when everything was going 50 to $100,000 over. So, you're going to spend $300, $400 more a month because you were overpaying for the house. Well, yes, rates are up, so you're overpaying in that regard, but you're paying less probably for the house today. And then I guess the last thing to just think about is that the rates will come down at some point. So you can secure a house today and then think about maybe a refinance down the road. So I wouldn't be so doom and gloom. I mean, I know it's hard, it's a tough pill to swallow, but I think at the end of the day, it's still a good opportunity to purchase.
Definitely. Wanted to go over some Smithtown numbers.
Yeah.
I just pulled these up. I actually pulled up for the past 3 months. 708 list price, average list price, 713 sold price. Average days on market is only 62. Really only 60 homes still available. That's half of what our average inventory that we talked about a couple of weeks ago, where it was 120 homes across the board, pretty steady for the year. We're still at only 60 homes, so inventory is definitely holding back the market also. But then when you look at this week, 13 price changes just this week alone, and consistently for the past year or so, even more, there's been no price changes at all. It's all been bidding wars.
Right.
Now people are putting their homes on the market and there's 13 price changes.
Yeah. I have a good friend of mine just recently listed his house in Stony Brook, and I think they listed it at 649 initially and just dropped it to 599 just because that's where they wanted. But based on where the market had been, they aimed a little bit higher, thinking that's where they would end up. But this is our new reality. So I think people are going to get better or more more stable deals where they should have been.
Right.
Again, with structuring your financing in a more competitive way, I think you can still make deals happen.
Yeah, I think if you're getting ready to list, you need to be with an agent that's a tough negotiator, but you also have to be realistic, and you have to stay ahead of the curve. So, and understand what I'm saying, with the interest rates going up, you want to stay ahead of that momentum and potentially price your home maybe a little bit under to create that frenzy a little bit.